Why is a 3D design software company making its largest acquisition ever, like buying a maintenance app just to learn when factory machines break down? Welcome, and thank you for coming to watch the video.
Yeah, I mean, it sounds like a total left turn for Autodesk, right?
Yeah.
But looking at their Q1 fiscal year 2027 presentation, uh, this is actually a highly calculated move to capture the physical world.
Okay, well, let's unpack this. We're looking at a powerhouse quarter here. I mean, they hit $1.9 billion in revenue.
Right, which is up 18%.
Exactly, up 18%. And they delivered 2.99 in earnings per share, so they completely crushed Wall Street estimates. They even raised their full-year guidance.
Yeah, the financials were strong, but the real story here is the strategy. They gave an update on their sales reorganization and then dropped this absolutely fascinating AI approach.
Oh, right, the blend of probabilistic AI with deterministic engineering.
That's the core of it because, most AI right now is probabilistic. Like it just guesses the most likely next word or pixel.
Right, which makes it super creative, but it hallucinates.
Exactly. And when you're designing a skyscraper or a suspension bridge, you cannot have hallucinations.
Yeah, gravity doesn't really care about your creative AI.
No, it doesn't. So Autodesk pairs that creative AI with deterministic engineering, meaning hard physics. So the AI generates, say, 100 wild designs, and the physics engine instantly validates which ones will actually stand up in the real world.
I love that. Like, AI dreams it, physics proves it. But this actually brings us to the massive news, right? Autodesk acquiring MaintainX.
Yes.
This is a maintenance and asset operations app, and it's pulling $135 million in annualized recurring revenue.
And growing at over 50%, which is wild.
Yeah, 50%. This instantly expands Autodesk's total addressable market by $40 billion.
Right. And more importantly, it shifts their 3D digital twins from just being in these static pictures into predictive living workflows.
Okay, but to understand exactly how that works, we really have to look at the analyst Q&A from the call. Saket Kalia from Barclays asked what the ultimate strategic goal was here.
Yeah, and Autodesk's answer was really telling. They said, MaintainX provides the missing link, right, which is field execution and real-world data. It completes their whole loop of design, make, and operate.
Which completely makes sense. I mean, it's like a car manufacturer not just designing the engine, but actually buying the repair shop so they can see exactly which parts break at 50,000 miles.
Exactly, yeah.
And then feeding that real-world wear and tear data directly back to their engineers.
Right. They are fueling their design AI with actual boots-on-the-ground maintenance logs. It's brilliant.
It is, but wait, this is where it gets incredibly spicy. Brent Thill from Jefferies asked the multi-billion-dollar question about the price tag.
Oh, yeah. Paying 18 times next year's revenue for an app is just an astronomical premium.
Totally. Now, before we dive into exactly how Autodesk defended that massive number, a quick reminder, if you're enjoying this, please hit the like button and subscribe right now. It really helps us out. Okay, so how on earth did they justify paying 18x?
So they pointed to two things. First, unlocking that massive $40 billion market and the incredibly rich AI data they get with it. And second, they pointed to their track record.
Oh, right, the construction playbook.
Exactly. They plan to use the exact same playbook they used in the construction sector, where, they turned $1.8 billion in acquisitions into a thriving $600 million annual business.
It really feels like they're just buying a foundation to build a skyscraper on top of.
That's a great way to put it, yeah.
But wait, I have to push back a little on that. Turning $1.8 billion into $600 million in recurring revenue is impressive, sure, but construction is a completely different beast than factory maintenance. Can they really just copy-paste that playbook?
It's a totally fair skepticism. But Autodesk argues the underlying mechanism is exactly the same, which is digitizing a historically analog paper-based space.
Okay.
But, there's another execution risk to consider here. Adam Borg from Stifel brought up their sales reorganization, asking about the level of disruption it's actually causing.
Right, because Autodesk is basically forcing its partners to focus entirely on hunting for new business instead of just, coasting on easy renewals.
Exactly. And Autodesk stated it is proceeding exactly as planned. Look, if you tell a salesperson to pivot from easy renewals to finding brand new clients, you expect short-term friction.
Oh, absolutely.
They argue this disruption is completely necessary to actually capture that newly unlocked long-term growth.
But none of this works without data, though, which led Tyler Radke from Citi to ask perhaps the most critical question.
The enterprise data question.
Yeah. Are big enterprise customers actually willing to share their proprietary sensitive data to train Autodesk's AI? I mean, you'd think the answer would be a hard no.
You would, but surprisingly, it's yes.
Really?
Yeah, Autodesk explained that because they offer radical transparency and very clear opt-out choices, enterprise customers are actually eagerly opting in.
Why?
Because sharing that data is literally the only way they get access to the massive AI automations that end up saving them millions of dollars.
Yeah. Wow. Okay. So just pulling all these threads together, the grand strategy here is that Autodesk is aggressively capturing the operate phase of the physical world.
Yes, exactly.
They aren't just a design company anymore. By acquiring MaintainX, they're building this physics-based AI engine that connects digital blueprints directly to the real-world wear and tear of physical assets.
It's a completely closed-loop system. The physical world teaches the AI, and then the AI designs a better physical world.
Which brings us right back to our opening question. And I want to leave you with a provocative thought to mull over. What happens to our cities and factories when an AI knows more about the